VTI is an extremely popular ETF to capture the entire US stock market, but is it a good investment? I review it here. VTI is the Vanguard Total Stock Market ETF. It launched in 2001. As the name suggests, the fund captures the entire investable US stock market in the form of over 4,000 holdings across large, medium, and small stocks. It does so by tracking the CRSP U.S. Total Market Index, which is market cap weighted. In case you didn't know, Vanguard is the go-to for reliable and highly liquid index funds with the lowest fees. If you've landed here, hopefully you do already know that passive indexing is a great way to diversify your investment portfolio and avoid stock picking and sector bets, which tend to be fool's errands. Most are familiar with the famous S&P 500 index, which is comprised of the 500 largest US stocks, and for which Vanguard's ETF offering is VOO. But some don't realize that VTI can be considered more diversified with more holdings and more cap sizes. Specifically, VTI is roughly 82% large caps, 12% mid caps, and 6% small caps. Small stocks are riskier than large stocks, so investors expect to be compensated with greater returns for holding these smaller stocks in VTI. I compared VOO and VTI in detail in a separate video here. At the time of this video, here are some quick stats on VTI. AUM of about $245 billion, expense ratio of 0.03% or 3 basis points, volume of $1.01 billion, a PE ratio or price to earnings ratio of 23.16, a PB ratio or price to book ratio of 3.85, a dividend yield of 1.61%, and 4,028 holdings. So is VTI a good investment? Of course. VTI is indeed a good investment in the sense that stocks in general tend to be a good investment. After all, VTI is the entire US stock market. Historically, it has had an annualized return of about 10% with volatility of about 15%. VTI is a great one-fund solution for US investors to be well diversified across styles and cap sizes. Don't mistake this broad diversification as meaning VTI is low risk though. Stocks are risky investments by their very nature. That's why we invest in them. Notice the drawdown of nearly 51% during the fund's lifetime. Conveniently, as is the Vanguard way, the fund is also very affordable at only 0.03% and has low turnover. This saves the long-term investor big bucks on fees and trading costs over their lifetime. VTI also has an Admiral Shares Mutual Fund equivalent VTSAX or VTSAX.